Hi everybody, this is AJ speaking. Welcome back to my Tesla 4Q 2024 financial review. This is part 8. Let's continue our cost discussion. In the last part, we ended the part 7 discussing R&D expenses. Now we discuss selling, general, and administrative expenses. So SG&A expenses, as it's typically referred to, comprises mostly of personnel expenses, include significant amounts of stock-based compensation, Tesla's case, facility costs, and other costs like Tesla's showrooms, marketing expenses, sales, executive compensation, cost for the finance department, human resources, IT department. Tesla's legal department is reflected in these expenses, and various other professional fees and other contract and service payments. So what's notable here is we have a similar trend to the one we saw in R&D expenses. You can see that in 2Q, and after Tesla took this all-time largest headcount reduction, we saw a significant sequential decrease. That decrease kept continuing in the third quarter, which was, to be honest with me, slightly surprising. I did account for CFO's commentary. He talked about this in 2Q. Tesla expected a run rate saving over $1 billion annualized. But then we had this reversal in the most recent quarter, 4Q, where we saw a sequential increase of almost 11% and also implying an increase of year-on-year of almost 3%. So this also added to the profitability pressure, obviously, in the fourth quarter. So on this slide, we look again at R&D expenses, but this time relative to Tesla's total revenue development. And you can see how Tesla's R&D expense saw a significant decrease in 2024. However, in the fourth quarter, we returned basically to almost peak levels near the 5% mark. So in other words, of every from every dollar of revenue, Tesla spends about 5 cents on R&D. And you can see in this chart sort of the historical range, which the minimum was about 3.3% or 3.3 cents per dollar, and ranged all the way up to 5.4% or 5.4 cents per dollar in revenue. And then sort of the same analysis on SG&A expenses. You can see that Tesla's SG&A spend in terms of revenue came down quite a bit after the peak in 1Q 2024. Tesla sort of pulled the brakes, did headcount reduction. This, what I called at the time, restored Tesla's historical efficiency, which is near the 5% mark. But now, following the low in the interim low in 3Q, Tesla's SG&A spend sort of crept up again. And the reason why it increased was the significant unit revenue decline from all the discounting, etc., because Tesla's all-time high deliveries had some effect on SG&A expense, because some SG&A spend is directly related to Tesla's overall volume in both automotive and energy and other areas. For this reason, I expect in 1Q a absolute decrease in SG&A, but in terms of relative SG&A spend, in terms of revenue, I expect this ratio to increase a bit further in the first quarter. And when you look at Tesla's sort of historical trend, in the first quarter of 2024, we also saw this increase because 1Q is seasonality, always the weakest quarter in the automotive world. This is driven by two factors. One is winter in North America and also in Europe and also in some Asian markets. Auto sales just go down simply because of that. But then also in the increasingly more important Asian markets, there's also the effect of Lunar New Year, which is a very big deal in Asia, many various Asian countries, and especially in the largest auto market globally, in China. And we see every year during just before Lunar New Year and immediately after Lunar New Year, auto sales to tank. So then we jump to the last item within the operating expense category, and this is restructuring charges. So restructuring charges, as the name implies, Tesla only incurs if there's any kind of restructuring ongoing. and you can see that during many quarters there's no restructuring spend. I mean, there's always a tiny bit, but sometimes it's just so small that it doesn't make sense to break it out in the P&L. However, in 2024 we saw this extremely or historically high level of restructuring charges in the second quarter. Tesla spent 622 million. And this restructuring was by a factor of 4 higher than every other restructuring Tesla has undertaken before. There was some spend that continued on into the third quarter, and there was a tiny bit of restructuring charge, just 7 million in the fourth quarter. Then the net result of all of this in terms of margin impact, and here I'm showing this time series excluding restructuring charges, because the 2Q all-time high restructuring charge creates kind of noise in the time series. So you look at this excluding, and you can see that the quite high 11% operating margin dropped by a quite significant 4.8 percentage points in the fourth quarter to 6.2%. I'd like to point out this is before the Bitcoin one-time benefit and another one-time benefit. So this is all operating business. So this margin reflects everything we discussed, the pressure in gross profit from discounting in automotive, margin erosion, energy, also margin erosion in service and other business, other segment, and also the significant cost increases in operating expenses is all baked into this number. And you can see that the operating margin decreased to the lowest level in many years. The only exception was 1Q, and 1Q, if you remember, was also a quarter that was riddled with one-time effects. Just as a very quick recap, in 1Q 2024, Tesla was hit by 2 shutdowns of the Giga Berlin factory. One was because of part shortages caused by the conflict near in the Red Sea, which caused the Suez Canal to be unshippable, caused significant delays in parts deliveries out of China. Then there was this arson attack that also shut down the factory for slightly over 1 week from memory. And then there was the Fremont Model 3 ramp didn't go according to plan, was significantly slower than initially expected. That created margin pressure. Then there were logistical issues. Tesla, I talked about this before, but Tesla has a sort of advanced logistical system. Tesla ships out vehicles to locations before there's actually an order. So they try to estimate what trim, etc. is being ordered in a certain postcode basically, and there were certain things that went wrong in the quarter. So all these factors added together, plus the seasonality in the first quarter, created a major miss in deliveries, and this then created this significant drop in operating margin. Once my 1Q 2025 forecast drops, you definitely should check it out, because I will try to reflect all these effects as best as I can. Then we get to operating profit, and as I said earlier, this is like the first sort of main profit line in the income statement, and you can see a quite substantial sequential decrease of 42% and a year-on-year decrease of 23%. And then when you look at the full year number, full year operating profit is down 20% to 7.1 billion from 8.9 billion a year earlier. So that the 4Q number is then just under 1.6 billion. And there are no drivers we can discuss, because the operating result is just the result of taking the gross profit less the operating expenses equals operating profit. That is just the end result of everything we discussed thus far. So I stop this part 8 here, and then we'll be discussing non-operating items which have been really quite critical to Tesla's performance in 4Q in detail, and this is basically sort of the key story of 4Q to a certain degree. So see you in the next one. Bye bye.